Good morning, everybody. Just gonna get started pretty much right away here. Thanks for tuning in. Always have way too many tabs open. Yeah, we're back. We're back here for London Live with SPDas, and we'll be back again for 8 a.m. With IT trader. If you're tuning in for the first time, SPDas is an Elliott wave theory trader, an educator, chartist, and he's basically a time machine. That's all I'm gonna say here. All right, see you soon. SP Das, the trading floor is yours.
All right, thank you, Igor, and once again, a warm welcome and hello to everyone. We are now starting the London session. It is 29th of January. If you're wondering, I flipped the chart from euro to the coins. I just wanted to run everyone through the charts for coins. We start from Bitcoin. Remember last session we were partially long in Bitcoin 99. Right now, I would want to say please take profits, whatever small profits we have accumulated, because the way, first of all, we need to take profits and settle the score. We got to remain flat, and I'm editing the trade setup here, and I'm explaining the reason why we are doing it. So 99 price action, which we entered in the last session, that trade is gone. I'm removing the limit order here. In fact, we would only go 50% capacity long, only 50% capacity. That's the fresh limit order, because we want to give this wave count a bit of more time to digest what is happening. Okay, now let me explain why we've done what we've done right now. First of all, there was a print higher around 110, close to that, uh, 20th of January, correct? And then there is a corrective decline. We're actually expecting a corrective decline. Now, if you do the counts here, I'm starting to do an ABC. Let's do that. If I put an A here, that then there is a triangle A, B, C, D, E, where B goes up there, and then C is still a question mark, but I would like to put it a bit lower. And the reason why I'm doing it is wave C has properties that it unfolds into two ways. Either it is an impulse or it is a diagonal. Now, at this point in time, as we speak, it looks like an impulse in the making. An impulse is always having five waves. So let me just change the structure and degree. So it's a sub-minute level, five waves. We've got wave 1, 2, 3, 4 possibly, and the fifth wave is still remaining. It's still pending. All right, that's the counts are not looking complete. Remember, I was a bit tentative when we went long 99, and we are talking about a potential 96 low to be hit before it initiates long or turns long again. Correct. But that's the reason why we have. It's even if you're not getting profits, I would have advised that let's get out whatever small losses we are making, but here we are making profits. There is no doubt that we should get out. Now, as we speak, there is good amount of possibility. We see some wave 3, 4, and 5 somewhere towards the vicinity of 95, 96, and then turn around. The reason why I advise only 50% is we don't know the price action right now. It's a fill in the blank. All right. We don't want to be all in and then get surprised. Okay. We can always buy a remaining 50% a bit higher. But as the risk is around 89, we don't want to commit completely in the long side. And the reason number three, one is the corrective wave. The second one is the wave C subdivision not complete. And the third one, if you allow me to do the Fibonacci extensions, a simple Elliott, not Elliott, but a simple extension, there is a convergence coming around the 96, 94 mark. And if I do an Elliott, where we take back to the B point and see where 1.618 is coming, it can actually go to 95 and even further. All right, so these are the reasons why we would like to not be in the trade right now and only buy 50% around 96. Let me do a last thing, that is channeling. And tell you what, we are going to keep this channel for a while. Let's see how the price action reacts. Now this channel is also coming around the 95, 95, 700 mark. So it's good to be 50% in around 96. By the time we are back in the New York or maybe next Tokyo or Sydney overlap, we will find out if we want to commit further. All right. Which I just wanted to discuss this trade in a bit detail. That was the right thing to do so, looking at the price action. Okay. So now let's go to the Ethereum chart. I think Ethereum we went long around 3100. We are somewhere around the same price. But looking at the pattern, that's a 5 A, B, C, D, E, and another 1, 2. If the 5 waves are complete, we are good. If not, there might be a corrective decline uh, below that 3000 mark. So be prepared for that. And if there is let's take 50% out right now. We just say 50%. Let's be in around 50% capacity. When in doubt, trading is always a game, okay? And when you are doubtful, even a percentage or a few percentage, I mean, we should not try to just prove ourselves or satisfy our egos and say that okay, we'll have a look at it later. It's better to be prepared, both sides. So let's take something out. Let's remain 50% into the trade. I'm not saying that we should get out of the trade completely. Our risk reward ratio is not bad, 29 the stop loss, and it's quite possible that Ethereum has completed the five wave structure. All right, so let's be into the trade here, but with the 50% capacity. All right, nothing more to discuss in terms of the Ethereum chart. I just wanted to confirm with the Fibonacci ratio. Let's do that. If that is the triangle E, then 0.618 has been met already. So I think we should be good. Remain 50% in the trade, please. The Solana is again, we have not gotten into the trade. So it's a good thing to happen. The only thing I want to change or propose here is only 50%, not more than that of our capacity. So if you're trading one lot or point 1, then you might want to just commit 0.05 at this point in time. The limit order is around 220. Again, the structure is quite simple. That is the First wave, three waves down, and then A, B, C, D, E, triangle, each one of them. Now, it hardly happens that wave twos would would unfold as a triangle, but it's not a rule that it cannot. But it's unusual for the second wave to consolidate within a triangle before the drop resumes. And that's why it is always good to remain just about 50% on the long side, because we don't want to take that complete risk and see ourselves completely trapped on the other side. Normally, when the trends are going to reverse, this is a pattern. When the trends are going to reverse, it goes a bit sideways for a while. Now, this is not a rule, but I've observed this as many times in the market. Let's find out the Fibonacci extension as well. That's okay. The 61.8 has been met, but please be prepared for one more dip, because I don't think it's a complete five waves decline yet. And if we try and do that and try and measure, it brings us down towards 213. We are good to remain limit order around 220, just around the 61.8%, the 50% capacity, and there's absolutely nothing wrong in it. Okay, the target remains unchanged. Finally, Ripple. Again, what I would like to suggest in Ripple is on the same lines. The corrective wave is midway over here. Let's find out. Let's find out the exact. Let's adjust the Fibonacci ratios. I think that is wave A. Neat little cut towards the 38.2%. That is wave B. And we are now looking towards a wave C. And one, see, one way to understand the chart is through the waves. It requires spatial intelligence and practice. The second way is very simple. You just need to do some math, and it's all available with the Fibonacci tool. You see that convergence. Now this is a bounce we can expect. The price action here is around 2.87. So let's just change this 84 and let's put a range here, 2.8087, 8085. I think that should be good enough, and we want to commit 50%. All right. The stop loss and the targets are unchanged. They remain unchanged. We don't want to mess around with the stop loss. Absolutely not necessary. We've got to be below 2.6, and that's an absolute okay. It's the right thing to do. So if that is an impulse, okay, it should be a three wave correct. There should be a three wave corrective decline. We've got the first wave A, that's the second wave B, and the wave C should be sharp lower towards 2.8 something. We go long there with the target around 3.7. All right, so I just wanted to touch base with the coins first, because there was some modification which was needed. Back to Euro USD, dollar index, and gold now. Okay, so we've got the first five waves now. The last session, we were still skeptical about sideways wave 4 going. It's still underway, right? We discussed that wave A could still push lower. Now, believe it or not, remember day before yesterday, I think it was, when we went aggressively short, super aggressive shots. The target was 1.04, and that has been met now, and it's absolutely time and again this has happened. So nothing to nothing to be overconfident, but it's a good thing that we are able to see the counts clear. Ideally, okay, now one more time, let's find out. This wave ideally should be accompanied by a bullish divergence, and you see that it's not a great bullish divergence. But if you see the previous low was here and the current low is almost around the same line. And when you flip the chart, maybe you can get a clear diverging scenario. Not clear because it's almost the same thing. But can you see five down? One, two, three, four, five. Okay, so that's at least good enough. Let me check on the 15 minutes time frame. There should be some form of divergence. Okay, here we have that was the previous low, previous swing low, and this is the current one. You see that is higher than the previous one. Some point in time, some time frame will always shout out that we are diverging. And you see that, can you count 53535, brothers? It's like a microscope when you flip the time zones. You see one, two, three, four, and five, and then three up, and then that's a straight impulse, three, and that could be a triangle wave four, or that triangle wave four, and possibly we have maybe one, two, three, maybe one more high and one more drop to complete the sequence. So in a nutshell, we are very close to a potential bottom forming. Expect a counter trend rally to materialize and then reverse very sharply. You never know if it can go straight as well, but the idea is trading point of view, we are long for positional traders, and okay, I think what is this trade? Okay, this is we are waiting for wave B here. Okay, so let it put it here. Let us put it there. If it doesn't trigger, if this doesn't trigger, then we are prepared to go long around 1.031020. All right. So that's the story in the Euro USD. Absolutely thrilling to see how it is. Let me remove these Fibonacci. I think the Fibonacci retracement is now pointing towards 79, so that's fine. 88, 90. Let's keep it that way, or maybe we can remove just to make the chart a bit clean. I think I can go and take that as well. So now it looks more cleaner, and the lesser noise you have on the charts, the more clarity you have uh, on the trade direction as well. If you are fond of indicators, like the price indicators, then go ahead and do it, but don't fill your charts with too many indicators, please. That would only confuse. Okay, so we've got that wave A, so I'm dropping that wave now. I'm hiding the wave. We are done with it. Now we want a corrective decline, wave B, where we're supposed to buy. All right, and the target is wave C. So let's remove other things. Let's keep it clean. All right, sir. The dollar index, positional short traders, continue holding shorts, please. Uh, Aggressive traders, our long targets have been now met. If you have not taken profits, you should be doing that right now. Wait for a corrective decline soon to happen before the next wave begins. So that's the diverging I'm talking about. Euro is not producing that clear divergence, but dollar index is doing that. So ideally, now it's actually sometimes trading at will. That's what I really like calling. Whenever you will, you can find out a trade. Now, if I'm a very busy kind of a trader, what I can do right now is go short with an immediate stop above 108, whatever the high is right now, just 10 points above that. Go short and target 60% of this wave, or 50% of this wave, or at least this price support, 10768. So if you're an absolutely short-term trader, you can make 30, 40 points within a few minutes or a couple of hours. But then you got to be willing to take that kind of more risk as well, because remember, more trades, we carry more risk. Each time we put a trade, we carry risk. But it's like just sell, take profits, again rally, sell, take. sell and take profits there, and then you are busy buying for a while, and then you again turn selling. So I mean, it's like an automated trading, but done manually. That's what. Okay. So one more chart, dollar index on the long side positionally, short side positionally, and long. Just wait for a while, please, before going long again. And gold, I cleared up the waves, but we can do it again. Potential top could be in place around the just around the 2788 level. The good thing is that 20, 2775 is not yet taken out, so we are still in the trade, short trade. Remember, we have taken a couple of trades on the short side, 55 and 65. And if these two levels hold on, then the next target for gold is projected towards these levels, 200 and 2700, and next is around the 2640 zone. All right, so I think we'll be back after a few hours to touch base again in the New York live. We'll touch base the indices then. But indices, we are not recommending trades. I'm just watching the chart right now, and when the time is right, we'll bring it up with an exact trade entry, specifically in the SPX 500. Dow Jones, we have committed on the short side. So we'll touch base when we come back in the New York Open. Until that time, once again, thank you for watching, and back to Ego now. Ego, back to you. Thank you.
Thank you very much, SPDas. Always a pleasure.
Thank you very much.
Alrighty, folks. Thanks for tuning in. Uh, if you found the session valuable in any way, please do us a favor, hit that like button, repost it, share it with your friends. We'll be back for New York part 1 with IT Trader, who does a different trading style, institutional trading. ICT Concept does his own research. He's been trading, we've all been trading for close to a decade together. Yeah, we just love it. This is what we love to do. I'm a professional software developer, trader, yeah, just a pleasure to meet you. We've got a lot of cool things coming up. Hope you've been to the white paper website, selena.forexlens.com. I got a couple of things on the itinerary before New York today, so I'm going to sign off. But it's been a pleasure, and see you soon.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.